Hello, this is Chris McKeppy, Head of National Sales here at BX Partners. Today, I'm with Young Lim, Portfolio Manager at Folio Beyond. We're here to talk about the dynamic volatility SMA strategy. What we're finding is many advisors and their clients are completely stumped about what to do with fixed income in the current environment because we're in a different environment than we've been in before and foresee a different one going forward. So we need a different kind of solution for that portion of client portfolios. We've come across what we think is a very interesting one here run by Folio Beyond, which is why we're here talking to Young today. Young, can you take us through an overview of the strategy?
Yeah, sure. Thanks, Chris, for the intro. Folio Beyond's multi-sector fixed income strategy provides an optimized exposure to attractive sector-based exposures based on an evaluation of all the major drivers of risk and return. And our strategy offers an attractive, objective, and repeatable process for managing a risk-managed portfolio of fixed income exposures. So we choose our portfolio components from a universe of 23 subsector ETFs that are all liquid and are fairly discrete in terms of representations of underlying securities. We then apply a multi-factor optimization approach that includes forward-looking relative value analysis with embedded options and credit costs all priced out. We include risk measurement from both a historical and forward-looking perspective, and we also incorporate momentum effects, correlations, and stress testing. All of these underlying analytics are updated on a daily basis with rebalancing occurring whenever there's a 15% deviation in risk target versus the ideal portfolio. So that provides an overall summary of our investment strategy.
Thanks, Young. I think that the strict approach to risk management is going to appeal to a lot of investors in this kind of environment because they do feel like there's potentially quite a bit. I think it's great that you've been able to address that with your modeling, which is really sophisticated. We've taken a good hard look at that over time. So what are the key differentiating points for this strategy versus others in its category?
We can point out a number of different differentiation factors. First of all, there is only a small number of comprehensive model-based strategies out in the marketplace, as far as we can tell. And on top of that, most of the systematic models, we believe, are momentum-based, and they're also biased towards a historically falling rate environment because these momentum-based models are looking at data points from a bull market. And so on. We think that very few models, if any, combine rigorous forward-looking relative value measures in conjunction with risk attributes that include forward-looking volatility measures, along with correlation effects and stress testing. And
yeah, thanks, Young. I mean, it sounds like the portfolio has such a differentiated approach and set of exposures that it's actually going to have a diversification benefit just when added to a more customary fixed income portfolio approach. So tell me, why would I want to commit client assets to the Folio Beyond dynamic volatility strategy now and in today's market?
I think there are many positives in employing our type of strategy in the current environment. As we look forward to the rest of 2020, it's certainly important to put the current market conditions in perspective and try to identify potential risks and opportunities. But as we've noticed the last few months, a lot of different relationships are in flux as the new administration programs are put into place. They're both positive and maybe overly optimistic economic and macro projections related to the COVID vaccine. But that kind of updates can be both positive and negative to the markets depending on how the news comes out relative to expectations. So the relative value relationships are likely to continue to be in flux as you have shifts in fundamental factors, as well as changes in overall CPI projections and other macroeconomic variables. And we produce optimized portfolio solutions subject to the appropriate risk constraints. And as markets change and relative value range, model will update these results automatically. And this all leads to a very disciplined, systematic investment process that should be helpful in developing and generating long-term success in fixed income portfolio management.
Thank you, Young. I appreciate you getting on with us here today to take us through an overview of your Folio Beyond Dynamic Volatility SMA strategy available on most major platforms. For more information on the strategy, including presentations, fact sheets, etc., please get in touch with us and we'll get you what you need to best understand whether this is a fit for you and your investment strategy.